On how investors are viewing the markets locally and globally. Let's welcome Sebastien Henin. He is head of asset management for the International Investor. Thank you so much for coming in. We've barely got days to run. This is the front of daybreak that I've been talking about. This stark choice, Nouriel Roubini, Soros, Li Keqiang, all chime in on the Brexit debate. Germany rules on ECB's QE mandate. Tell me this. What do you talk to your clients about at the moment? What is the region talking about Brexit? I was looking at what the Kuwaitis own, what the Qataris own, and indeed what some of the royal family up the road in Abu Dhabi own in the UK. The region has a huge amount vested in the UK, hasn't it?
Yeah, but I think there is a commitment from local investors to the UK. You know, when you buy real assets such as real estate in the UK, it's not a one-off investment. And I suspect that many investors will take the opportunity to add to their current portfolio in the UK. That's one aspect. The second aspect is related to what might happen to local equity markets in the region and to GCC economies. I suspect that the Dubai economy might suffer a little bit in the hospitality sector, in the real estate sector as well, due to the fact that UK investors are roughly 8 to 10% in these two sectors of the buyers and the tourists. And at the same time, equity market might suffer as well from redemptions from emerging market players due to the fact that they might decide to divert some of their investments that they have in the region. The reason for that, we should expect the dollar to become stronger in case of Brexit, and it will put more pressure on emerging market currencies. For sure, it's not the case here. The currencies are pegged, but the total allocation to emerging markets might be reduced, and we might be penalized for that.
Sebastien, it's Rish in Hong Kong, by the way. Just to ask you, what happens, though, as we look at the Fed after, of course, this vote on Thursday, it gains more and more prominence, and it does look as though we're perhaps not going to be getting an interest rate hike or changes in monetary policy for a while. Is the real resistance or lack of resistance for the dollar to the downside now?
Yeah, I suspect that there is a limited downside related to the Fed decision. I mean, the downside is more related to the Brexit. And we know that we are still 6 or 7% above the recent lows of 2015. So there is still a buffer for the dollar.
Sebastien, okay, the thing is, you're talking about the dollar as a peg in the region, of course, to many of these currencies. And I think Manus and I have been talking about this for a while, and that is, at what point do these pegs really, given the debt situation that some of these countries are perhaps going to have in the future, when do these pegs come under real significant pressure?
You know, for the time being, they can manage properly their pegs. They have strong foreign reserves. They have almost no debt, meaning no pressure, no selling pressure from market participants. I guess it's completely manageable. And from a financial point of view, and on top of that, there is a political will to maintain these pegs. Don't forget that if they decide to take the decision to depeg their currency, it will add more inflation in this country, and the inflation is already pretty high. And the recent decisions which have been taken, for instance, to cut subsidies or to add new taxes, if on top of that you decide to depeg, you might reach very high level of inflation. So I guess it's not in the interest of local governments to take such a decision in the current environment.
Sebastien, I want to take you back to a sort of slightly more local issue. We've got the NBAD First Gulf deal, potentially. We know that they're talking. That would create, I was fascinated to see, I mean, I know market values are one thing to go by, but it would be $29 billion. That would make it larger than Credit Suisse, larger than Standard Chartered, and larger than Deutsche Bank. And I know they've been battered. What do you make of this deal coming together? If it comes together, a good deal, would you add to this stock versus Qatari banks versus Saudi banks? How would you look at this deal if it came to pass?
Yeah, I think it makes a lot of sense. You will have an opportunity to buy a stock in the regional leader in the banking sector, and there are a lot of synergies between these two banks. We know that FGB is a retail focus. 40% of the book is our retail loans, and at the same time, NBAD benefits from a very cheap cost of funding, and at the same time, they have a very strong presence with GREs and corporates. So I guess it's a unique opportunity to have an exposure to the UAE economy.
Look, just circling off on the local issues here, I was looking at Qatar. The government withdraws. That is going on. Loan-to-deposit ratio drops again. Qatar government deposits declined to 62.2 billion riyals. This is the real manifestation of pressure. What's your view on the Qatari banks? And with oil struggling above $50, the ramifications there?
You know, don't forget something. In the current environment, the governments have a lot of options, and so far they took the easiest one, which was to withdraw the deposits that they have in the banks. They have done that in Qatar, they have done that in the UAE as well. But they can also raise money on the debt market, or they can use, you know, the assets that they have parked in their sovereign wealth funds. So I think it's completely manageable. The local central banks in each country are monitoring that very closely, and at the same time they are supporting the local banks by providing some liquidity to balance this effect.
Well, that's just it, isn't it? And we've been asking about consolidation. Will we see more cross-border consolidation, in particular in the GCC here, Sebastien? Very quickly.
Yeah, we might have some consolidation, but there is something very important that I would love to mention. You know, most of these big corporates in the region are owned or controlled by local governments, and it's not only an economic goal. You know, they want to develop or to diversify the country. So that's why we have not seen, you know, so many mergers, especially in strategic sectors such as real estate, banking, etc., or energy. But for instance, in some more mature sectors, we have already seen a lot of mergers. For instance, in the telecom sector, I think, for instance, in that sector, we shouldn't have any merger in the region. On the opposite, for instance, insurance sector or building materials sectors, which are very fragmented with a lot of players in each country, I suspect that in the coming years, and it will be encouraged by the regulator, we should have more mergers.
Sebastien, thank you so much for sharing your thoughts with us this morning. Sebastien Henin, Head of Asset Management at the International Investor. Rashad.